One of the surprises this weekend was not Tom Brady working out. It was cut and chiseled Vladimir Putin working out this weekend. Mr. Putin hitting the weights, Mr. Medvedev helping out as well. They're on the machines, they're working out, they were vacationing in Sochi. This, meanwhile, as the Russian economy tanks. Amid the news flow of August with oil descending, Moscow has been very quiet. We need a briefing. Neil Shearing is chief emerging markets economist at Capital Economics, and he's won a claim on the Russia Watch, joining this morning. I remember when ruble was at 70 the last time, dollar ruble, panic. Why is there no panic this time with ruble near 70?
I think it's been a bit more gradual this time. Last time it got to 70, it collapsed. It got to
Correct.
70.
One day round trip.
Exactly. And in fact, it broke, at one point it got to 85 and then came back again. This time it's been much more gradual. It seems to attract oil lower, hence there's less sense of panic. But of course, the economy is still in a pretty bad state.
The economy's in a bad state. Vladimir Putin has huge popularity, I'm right. Do you see his popularity wavering as they struggle with economics?
We're just starting to see the first signs in the early polls that his popularity is dipping. There was a poll released 2 weeks ago. High inflation is starting to eat into that popularity. I mean, still by far and away the most popular of any of the major global leaders at home, but we're just starting to see that they may have peaked.
How much is it really impacting the economy, though, in the sense that people are actually leaving Russia to go find jobs elsewhere, or they're suffering in the sense that they don't have enough food?
Well, because the government's been able to whip up this nationalist fever, it's really not had much of an impact in terms of emigration, people thinking that that they're going to leave and try and seek jobs elsewhere. In fact, that's probably already happened. We've seen most of the kind of educated Western liberals kind of leaving. That's probably happened. The people that have stayed at home, not much impact on migration flows. But, of course, real wages are collapsing.
Well, Neil Shearing,
10% down.
Let me bring in Carl Riccadonna with us this morning from Bloomberg Intelligence. Carl, I know you've looked at how Russia dovetails into hydrocarbon economics and also, frankly, into our international relations.
Sure, absolutely. I mean, the key here is exchange rates matter. This should be the lesson for all central bankers, whether they're Russian, U.S., or European or Japanese. The move in the currency is causing very significant inflation in the Russian economy.
Then I'm going to go to Ian Bremmer in a G0 world. Is Russia part of the G7 or the G8? Are they an emerging market, which you cover, Neil, or are they a frontier economy?
Well, I mean, it depends how you define it. In terms of income standards, they're somewhere between emerging market and developed market. In terms of clout on the global stage, I think they have almost none now.
Really? You would say none?
I think that certainly within the G7...
He looked awfully good in that white T-shirt.
Well, it's become a tradition. Every August we get Vladimir Putin, saving tigers, fishing with bareback.
When is it time for them to swap roles again? When does he become Medvedev?
So there's another election in 2018, but he can serve a second term.
OK. So how are they managing to keep the ruble, though, at 60? We are 2.5% weaker or so versus the dollar again today, but why hasn't the ruble completely collapsed?
But bear in mind that a weaker ruble actually helps the government to some extent because it increases the local currency value of their oil revenues. So oil's priced in dollars, ruble collapses, the ruble value of those oil revenues goes up, and
so
that helps to repair the public finances. So the moment the public finance has been decimated.
Can you comment on the strength of their banks? I've been watching personally just to see when the banks finally blink. Do you just assume a bailout by Moscow?
I think that will happen. Yes. I mean the way that the banks are structured, big five banks are safe. The mid-tier banks are the ones to watch. They're the vulnerable ones. I suspect they'll just get bailed out by one of the bigger banks.
When you look at emerging markets, I mean, August, what a month it's been. When you write for September, what will be your tone across all emerging markets?
It's strange. If you went back 3 months ago, I'd tell you that the consensus was wildly optimistic and too optimistic on the prospects for emerging markets. Literally in the last 4 weeks, things have switched around, and I think they're now too pessimistic.
How can real GDP be minus 3.7%, CPI be more than 15%, and there be only 6% unemployment? Are those statistics just wrong?
At the moment, we're at the stage where firms are hoarding workers, but bear in mind that the pain has not been felt in unemployment, it's been felt in the collapse in real wages. So people are keeping their jobs, but their incomes have been cut.
Very quickly, which nation are you following as a litmus paper for the global system? Is it Brazil, like so many others?
Brazil, China. I think the really interesting one to keep an eye on is Mexico, because that's going to really tell us how quickly the US economy is recovering and the strength of US demand lifting.
Do you have a tip point on currency? Quickly here, Mexico at 17. Is there a further weaker peso as a tip point?
I think we may be at the bottom.
We're at the bottom now where we get Mexico straight. So. Neil Shearing, thank you so much with Capital Economics on emerging markets.